Good morning, trading world. It is February 23rd, 2023, 8:18 a.m. on the East Coast, and this is my pre-market outlook and technical analysis for day trading the markets. Preparing for a bounce by getting short into the meat of the bounce. There's a saying, rising tides raises all ships, even the raggedy ones. Those raggedy ones are my targets. Raggedy ships equate to stocks that have a stupid PE ratio along with being stupidly overbought. Also, start to look at financials for leadership to the downside. Enjoy the bounce for now, but know it's going to get ugly soon. Also, I will save the biggest of my shorting activity for when we get a strong bounce that rises along with a VIX that rises. During this bounce, look for the daily and weekly chart to rapidly run up back into overbought areas. Let me bring up a drawing tool just to excuse me. Let me bring up a drawing tool just to show you what I'm talking about. We have a 1 year daily chart here on the SPY, and we're going to use the RSI as our means of showing overbought. So what we're going to look at is a rapid increase or run back to the overbought area. And remember, a VIX above 23 can act as a fast forward button, speeding moves up that normally take days down to hours, and those that normally take weeks down to days. So you might be thinking that, okay, in order for us to get up here to the overbought area, and this is pretty much all we need to get to in order to consider it overbought now, because we've touched up to the 70. So anything from now is probably going to be or possibly be a lower high, but we could get that touch into the red over 70. But what I want to see is a move that's going to take us just sharply up like that on the daily. The weekly, we may not go all the way back up into this level on the RSI, but we may just peak above the halfway point. So that's what I'm looking for to signal that rise. As soon as I see this sharp turnaround, that's when I know it's definitely time to start spreading the short love out and looking at all the items that I've accounted for that I want to short and start putting those positions on. The weekly has reached this point of, we're at a point where now it's safe to roll over. It has reached this apex on the high side, so it is at a point where we could start to roll over. The one thing that I want to watch out for is the monthly. The monthly is starting to move now, and that's going to speed both the weekly and the daily up. However, on the monthly is still, on the RSI, it's in that middle ground, so we only need for a small peak above the middle ground level on the monthly. So those are the things that I'm going to be looking for. On a side note, those that worry about the PDT rule need to be extra careful. It's being spread that instead of getting a slap on the wrist, the usual suspended. I know that a long time ago, Thinkorswim used to give you a slap on the wrist where they would impede your account for I forget how many days, but it could be maybe a couple weeks or days, and then you could call and request and they would lift the restriction. Well, as of now, FINRA is going to start enforcing brokers to close your account permanently for PDT violations. For those that don't understand the PDT rule or pattern day trader rule, it's when you execute 4 or more in and out, also known as round trips in the same day within a 5 rolling day period. So if you take a trade in and out that day, and then in that rolling day period, that 5 rolling day period from the point that you do the first in and out trade, you execute 3 more within that 5 rolling day period, that will put you in violation of the PDT rule. Of course, and this is along with having a margin value of less than $25,000. That's the PDT rule in a nutshell. Ways that you can avoid the PDT rule: use a cash account if you're going to do in and out. You won't have access to be able to do spreads, but if you're just doing directional buying calls, buying puts, use a cash account. The other way to get around this is simply by trading futures or options on futures. Futures are run by a different governing body than FINRA, and you can go in and out as much as you want on futures. So that was my side note. Let's get to the key levels of the day. All right, here we are back with the key levels of the day. Starting on the resistance side, we have our jack resistance at the 400 to the 401 area. Queen resistance is going to be 402 to the 403 area. This is going to be very important today. We could see some type of rejection somewhere between that 402, 403, and maybe 405 that will take us back down, and that down may drop us very low or back to the beginning in the overnight session. So that's something to look out for. Then we have our king resistance 404 to the 407 area. Now on to the support side. Our jack support is going to be 399 to the 398 area. Our queen support will be 397 to the 396 area, and then king support 395 to the 392 area. This we have a chance of seeing in the overnight session. Remember, I talked about us dipping our toe in and testing the waters of the lower main channel. The main channel that we're in right now spans from 397 up all the way to 416, but a main channel below us is from 397 down to 379. But I do believe at some point we're going to dip a toe in the water down below this 397. And that could happen on Friday, possibly pre-market or during a lunchtime drop. Usually I talk about a lunchtime chop, but at this point we could get kind of a midday drop. All right, the main thesis for today, excuse me. The main thesis for today is bullish, closing above the 398.54 with a projected target high of between 399 and 407. The alternate thesis is bearish, closing below the 398.54 with a projected target low of between 398 and 390. Should be 392. The main channel we're in, again, is from 397 up to 416. The main channel below is 397 down to 379. Yesterday, market strength and breadth gapped up, tried to stay up briefly before falling and bouncing back, but overall being a range bound on the day. I expect more of a bounce up, possibly range bound with a bullish tilt to it. We do have harmony between the technical side, which is bullish, and the quant side, which is bullish as well. That brings us to the scenarios of the day. All right, here we are with our first scenario and most probable scenario. It is our rounded reversal day type structure. We could get a continued push higher toward the Jack or Queen resistance area and find midday chop around either the Queen or King resistance area before going back down with the same amount of force or energy that we went up with the first part of the day. That is our rounded reversal day type structure. I do want to alert you to our vice versa alert, which does have a good chance of showing up today. And the vice versa alert for the rounded reversal day type structure looks like this. We're going to continue excuse me, lower through the cash open. Look to find midday chop somewhere around the Queen. We'll leave it at the Queen support area for now. Find that midday chop there, and then rise back up with the same amount of force and energy that we came down with the first part of the day. So that is the vice versa alert on the rounded reversal day type structure. All right, our next two scenarios are pretty much even when it comes to probability, but the first one I'm looking at is going to be our trend day up, meaning we open gap up and start with a push back toward the previous close represented by the blue line. We find support on or before that previous close, then begin the uptrend for the day. We usually find midday chop around either the possible Queen or King resistance area. Not always, but a lot of the times we start the second half of the day with a head fake, which looks to continue the primary trend of the morning, but at some point we get a reversal and fade going into the close. So that is our trend day up day type structure. And here we are with the last scenario of the day, which is our expanded range day structure. We could get a push up and begin to consolidate around the jack or queen resistance area and push back down at some point to revisit lows before trying another pop to the upside that may decide to fade into the close. That is our expanded range J structure, and sorry about that, I had to make that little correction. We may fade at or into the close. But these are the scenarios that I'll be preparing for today in that order. As always, it is also important that you understand your most important job as a trader is to protect the capital that you already have. And we do this by knowing and understanding the risk that we have on in each position and managing that risk in accordance to our account size. Again, I hope this helps. And again, regardless of how pretty things begin to look in this bounce, just know that there is something ugly waiting for us on the other side. Don't get too happy and too caught up in the bounce that is coming. Again, I hope this helps. Wishing you a positive trading day. Let's go out and make it a great one.